That is the ChatGPT moment for crypto, because what's happened is that the first killer app for crypto has emerged that is now seeing widespread adoption, which is stablecoins. And now Wall Street is running to tokenize and maybe even financialize their entire system on the blockchain. If I had to choose, because I'm chairman of Bitmine, which is an Ethereum treasury, then I, of course, would choose Ethereum.
Bitcoin and Ethereum are entering an irreversible phase of financial dominance, and Tom Lee sees the writing on the wall. As the world transitions from physical to digital value systems, crypto is emerging not just as an asset class, but as the foundation for a new monetary and financial order. In this transformation, Bitcoin represents digital scarcity, a modern alternative to gold, while Ethereum powers the infrastructure required for tokenized finance and AI-driven economies. In this expert breakdown, we explore Tom Lee's macro vision, from sovereign Bitcoin acquisitions and tax incentives to Ethereum's role as Wall Street's smart contract backbone. Lee's thesis extends far beyond speculative upside. He frames Bitcoin as the backbone of a digital treasury system and Ethereum as the rails for a fully tokenized global economy. With institutional adoption accelerating and generational shifts underway, the case for long-term crypto dominance has never been clearer or more urgent.
Subscribe to Daily Bitcoin Trends for expert insights, real-time market updates, and proven crypto strategies. No hype, just smart analysis to help you make better decisions in crypto.
I think the day the US says they want to acquire 1 million Bitcoin, I think Bitcoin's price is going to go up parabolically.
Right.
Because how is the US going to buy it? I mean, they can't, if you know their wallet, you're going to see every buy, and it's going to become a national pastime for everybody because they're a long buyer. I think it's going to be easier for them to buy large holders of Bitcoin. Maybe even give tax amnesty, right? That's why they're saying it's tax-free. We won't tax capital gains. They'll do everything they can to try to acquire Bitcoin. Mm-hmm. Maybe, but MicroStrategy has a sovereign put. They have 600,000 Bitcoin. That's the easiest way to get to 1 million Bitcoin. I think Bitcoin should be, over 1 million over time. And then I kind of prescribing to the view that there's probably a chance that maybe the 4-year cycle is ending for Bitcoin because of the way institutional adoption of that thesis is taking place. And so you have institutional and essentially permanent holders of Bitcoin coming in. So it should be good. So I think Bitcoin should really build upon this 120 before the end of the year. So, 200,000, maybe 250. Every generation, we're talking about generation alpha now. They are native. They're born native, and they're also going to be born in a world of AI. And so this idea of physical money and only physical things represent value is not going to exist. So I think that's why Bitcoin's future, the best years are still ahead for crypto. Bitcoin, obviously, and Ethereum. Not everyone will agree on Ethereum, but because we have another generation of people and decision makers that are really growing up as in a world where AI is prevalent in their lives, and then really a token economy. So I think the best years are still ahead. Bitcoin to me is a proven blockchain that, in my mind, is storing value. And it is, as like Michael Saylor says, it's immaculate. And I do think the simplest way to think of it is it's replacing gold. So at least let's get to 1 million, and then we can see how much further Bitcoin goes. But the world is also grappling with the digitalization of everything that we do. And so we're storing information, and we're tokenizing businesses, and we're tokenizing the dollar, and stablecoins have become so important, in fact, from a policy perspective, because stablecoins are now actually big buyers of treasuries collectively. That's why you may say you don't have to worry about deficits because stablecoins will buy the debt. Well, that is the ChatGPT moment for crypto. Because what's happened is that the first killer app for crypto has emerged that is now seeing widespread adoption, which is stablecoins. And now Wall Street is running to tokenize and maybe even financialize their entire system on the blockchain. but that means they require smart contracts. So they're not fighting with Bitcoin. Bitcoin paved the way for Wall Street to recognize that you don't have to have tangible assets to create value. But if you're going to tokenize what Wall Street does and you tokenize stocks and real estate, you need smart contracts. And the biggest and most secure blockchain with no downtime is Ethereum. And it's legally compliant, and the majority of stablecoins and real-world assets that have been tokenized are taking place on Ethereum. So to me, that is the macro moment. So in 2017, when I first wrote about Bitcoin, I saw this as the time when Wall Street would eventually come to recognize Bitcoin's importance. So Bitcoin, of course, had already accomplished a lot because it reached 100 billion in network value. And that's why I wrote about it. It's like, you know, if you don't believe in something that gets to 100 billion, like, you got to pay attention to. And our thesis was that Wall Street would start to view this as just digital gold. Well, I think Ethereum is having its 2017 moment now, because now is the time that Wall Street will take tokenization seriously, and it's taking place on Ethereum. So I do think it is the biggest macro trade for the next decade.
Tom Lee forecasts a seismic market event the day the US government moves to acquire 1 million Bitcoin. Such a move would send BTC into a parabolic rally, with the only viable acquisition path being purchases from existing large holders like MicroStrategy, which already controls over 600,000 BTC. This scenario could spark tax amnesties or capital gains exemptions to facilitate sovereign accumulation. Meanwhile, Lee notes a deeper shift: the emergence of institutional and generational diamond hands that treat Bitcoin as permanent treasury infrastructure, not a tradable asset. He predicts Bitcoin surpassing $200,000 to $250,000 in the near term, and believes the 4-year halving cycle may be ending due to growing institutional anchoring. Simultaneously, Ethereum is entering its own 2017 moment, powering tokenization across finance. Smart contracts and legal compliance make Ethereum the preferred chain for stablecoins, real-world assets, and tokenized securities. Wall Street isn't fighting crypto, it's building on it.
So let's say, what is the financial system's value in the US, in the real world today? Well, the GDP is 80 trillion, and the financial system is 80 trillion. And that runs on plumbing that, if you're raising risks, are far more fragile. We are using trust vectors that are, in some cases, arcane systems, transfer agents that, you know, rubber stamp things. I mean, look at the level of fraudulent activity on a traditional financial system ledger. You know, JP Morgan, who I think is leading in terms of security for its customers and trying to do fraud prevention, still about 7% of their activity is suspicious. So you can't prevent infiltration. So is Ethereum superior to that? Yeah. I mean, so if you're comparing it to Bitcoin, we're comparing the wrong analog, is my opinion. So Bitcoin is scarce, and so it's proper for companies to have Bitcoin on their balance sheet over time. And I think banks will, because banks, as Bitcoin really does get recognized in its proper place as how you move money in the financial system, then the banking sector will actually stake Bitcoin as well. They're going to want to own it, I mean. And so these treasuries are doing what other businesses will eventually do. But for them to get a premium to their Bitcoin because of how they're executing a strategy, that is the scarce part. MicroStrategy has already proven that their strategy works, because they started on August 12th, 2020. They bought 260 million Bitcoin. Stock was $13. Now they own close to 5% of the Bitcoin network.
Yeah.
And they announced a huge buy last week, but the stock is 400. It's gone up 30 times. So that's truly executed in a masterful way. Michael Saylor's view is that Bitcoin's going to compound at a rate that justifies any relative level of liability that normally would be tough to stomach. And so that's why he's created these structures. But they've been enormously successful products. And of course, he could change and refinance them at any time. So I think the main thing is Michael Saylor is changing the reality of the stock market. And the reason is that he probably will end up being the largest, potentially the largest company in the stock market, okay? Especially if Bitcoin goes to 1 million. Yet he doesn't generate GAAP net income to justify it. He's based solely on the value of his balance sheet. And but that's not new to history, because when I graduated college, the biggest stock in the S&P, a top 5 name was ExxonMobil. And it was top 5 for 28 years, 30 years, like an entire generation. Graduated, worked on Wall Street. A top 5 name was a company that was only valued on the value of its oil, not on its net income. So like MicroStrategy is like replacing Exxon in lore, because, you know, for a whole generation, people said Exxon was the biggest company, but you don't value it on earnings. Well, MicroStrategy could be one of the biggest companies in the world, and it's valued on its Bitcoin.
Tom Lee concludes with a historic parallel. MicroStrategy could become this era's ExxonMobil, a company not valued on income, but on the strategic control of a critical resource. If Bitcoin hits $1 million, MicroStrategy, through its BTC holdings, could become the largest company by market cap, without conventional earnings. This redefines corporate valuation in the age of digital commodities. Lee also points to the explosive growth of stablecoins, now essential buyers of US Treasuries, as the ChatGPT moment for crypto, signaling mainstream utility and adoption. Ethereum, with its unmatched uptime and secure smart contracts, is quietly becoming the financial layer of the tokenized future. As the traditional system grapples with outdated, fraud-prone infrastructure, the blockchain revolution is inevitable. Bitcoin offers pristine scarcity. Ethereum provides programmable liquidity. Together, they are remapping the global economy. For investors and nations alike, the message is clear. The future isn't just crypto-enabled, it's crypto-native.